Arizona's economy growing or slowing?
I think we're going to see economic activity slow just a bit, not a recession again for the next 6 months or so, and then it'll pick back up once we have more certainty.
For now, it's affecting everything, especially job growth. Yet there's cautious optimism.
Obviously, all of us want more jobs, and I think we could have more jobs, but it's in the positive trajectory, and I think it's moving in the right direction.
But it's not moving fast enough to give state government officials a sense of comfort.
I have a great concern about what is happening in the state in terms of cash flow.
Tonight on Arizona Week, an update on the state of the economy and state finances.
Production of Arizona Week is made possible in parts by a grant from the Stonewall Foundation and by the members of Arizona Public Media. Thank you for your continued support. Once again, your moderator, Michael Chiha.
Arizona's economy is expanding. Our job growth is 6th strongest in the nation, and state government is writing a big surplus and solid cash flow for the first time in several years. But economists and state officials are expressing caution about an economic softening that will affect state government revenues and about federal government financial issues, including the coming fiscal cliff. They outlined their views of the fiscal picture at Thursday's meeting of financial advisors to the Joint Legislative Budget Committee at the state capitol in Phoenix. Budget Committee Director Richard Stavnik opened the meeting with optimism, tempered by a note of caution.
Our 12 ending balance was approximately $275 million more than expected, but our 13 revenue growth is slower than forecast so far year to date.
State Treasurer Doug Ducey also had positive news for the state's checking account balance, and he too had a worried tone.
I have a great concern about what is happening in the state in terms of cash flow. While we are positive today, and I think it's important to remember that just 2 short years ago, we were negative $730 million in the state's operating account. And it's wonderful to be able to come in here and talk about a cash balance that's well over $1 billion today with $450 million in the state's reserve account. There are a lot of things in front of us.
Ducey said those include economic conditions overall and decisions about expensive Medicaid expansion and the 1-cent sales tax, which is on the November election ballot. Based on those and other factors, economists at the meeting weighed in with their own cautions.
I think it's quite appropriate that we have a very conservative forecast for revenue growth.
That was economist Marshall Vest, who as Director of Economic and Business Research at the University of Arizona, provides the state with economic benchmarking for its finances. Fellow economist Jim Rounds of Elliott D. Pollock and Company in Scottsdale told the committee that he foresees some softening in the next few months.
We're seeing some pretty decent rates of growth, but the economic data is suggesting that we're seeing things stall just a bit. A lot of that has to do with psychology. A lot of that has to do with the uncertainty in Washington.
Vest echoed that.
Not at all excited about the current crop of the statistics. The economy is growing slowly. Reduced employment growth. I worry about withholding growth as well, being as low as it is.
That was a reference to the state's current tax collections on worker payrolls. Rounds added that while there's optimism because of job growth, the national unemployment rate went down 0.3 in September. Sustained and accelerating growth is probably several months off.
We think we are on the cusp of seeing a lot of this data related to jobs jump up more this time of year, but I think what's happening is that this uncertainty and that psychology that we've been talking about and we really emphasized a couple or 3 years ago is coming back, and it's going to push off some of the growth maybe into the next fiscal year. So a scenario where we have a slightly weaker 13 and then a little bit of growth after that actually matches up with some of the basic dynamics.
Then Rounds and Vest explained why there's an economic slowing in Arizona, perhaps beyond what's being seen nationally.
Why the weak economic activity again? Can't overstate the importance of what's happening in D.C. and just the general psychology among businesses and consumers. A lot of people are talking about how Arizona is more cyclical than the U.S. It is, but it's more cyclical on the upside. Historically, we've outperformed the U.S. even in times of recession. What's different this time around? Population flow stalled.
California historically has sent us about half of our in-migrants, and those housing markets are not recovering nearly as much as what we see here in Arizona yet.
In other words, Vest and others said, Californians can't sell their houses and thus can't relocate to Arizona to contribute to population growth, which has historically been the state's main economic driver. How soon will there be a turnaround? Even the economists can't say for certain.
We have a limited ability to predict the future.
After the Finance Advisory Committee meeting, we sat down with Rounds and a couple of others to get more details on the state's economic and financial picture. Is Arizona's economy doing well right now?
We're ranked in the top 10 nationally. We're number 6 in terms of job growth. But we have to be careful with how we interpret the data because it doesn't take a whole lot of growth to be ranked that high. And so we want to take a look at the rates of growth. Yes, we're number 6. The greater Phoenix area is number 4. But we need these strong rates of growth just to get back to normal by 2015 or maybe 2016. And it's because we fell so far. So it's positive news, but we have to put it in the proper context as well.
You told the Finance Advisory Committee of the JLBC that normal won't be here or full recovery won't be here until 2015, 2016. Talk about that a little bit. What's that based on?
All the economic data tends to come together about the same time. You don't have return to normal in population, and then 10 years later you have return to normal in employment. Everything is interrelated. And so we're looking at getting back to normal in terms of the total level of jobs, getting back to the long-term trend, 2015, 2016. We're looking at retail sales collections that impact the state around 2015, 2016. Getting back to normal in terms of working through the excess in housing. So all those economic indicators are all pointing to the same date, and that's why we feel good about our forecast, because it makes sense when you read the story. The economic data will tell you one thing, but if there's not a solid story behind it, you know something's awry.
And then there's the national factors. Can you talk about those a little bit, that they're totally out of our control?
Right. The national factors, we have this additional psychology element in the economy right now. People are a little bit uncertain whether or not we're going to go into another recession. I'm not a believer of another recession, but I believe the risk is that we have extremely slow growth, which could cause some fiscal problems. So consumers are pulling back a little bit on their spending, more than what we saw earlier in the year. And we're going to see that for the rest of the calendar year and probably part into the following. Businesses, we're starting to think about investing more in capital equipment and plants, employees. We're going to see them hold back a little bit. But you can't really blame them, because when you have this uncertainty and you only have to wait a few months, it kind of makes sense to say, you know what, it might be financially prudent to just wait a few months and see what's going to happen. So I think we're going to see economic activity slow just a bit, not a recession again for the next 6 months or so, and then it'll pick back up once we have more certainty.
Now, you say that this has been a cyclical downturn as opposed to one that changed the fundamentals of the economy. Why do you say that?
Well, the fundamentals remain in place. We haven't seen anything in the recession that disproportionately affected Arizona in terms of permanent impacts. Yes, we went through a recession that primarily was involving single-family housing and also commercial. It was construction. We're very dependent on construction, and we're going to continue to be dependent. And so it was somewhat expected, given that that was the focus of the downturn, that those growth states, quote-unquote growth states, would be the ones that would be impacted. But we're going to be a growth state coming out of this. People are still going to want to move here if we have a competitive business environment, which we've actually improved upon. We have a great potential for retirees that not enough people are focusing on. I'd like to see maybe the Commerce Authority and the Office of Tourism develop some programs for joint marketing, because over the last 3 years, the vast majority of retirees said we're going to hold up where we are now because they were upside down on their homes. Across the country, only about 20% of mortgage owners are upside down. And so there's a great opportunity for people to move here. There's going to be population growth. So we're still very bullish on the economy in the long term, but we're also bound by what's happening in Washington and across the nation, which is going to dampen the recovery some. So the rates of growth could look good, but the overall levels of activity, not back to normal until mid-decade. And then after that, I think we have a great future if we do things right.
Now, doing things right, does that mean trying to break that cycle a little bit so that we don't get back into the boom bust?
Yes, but it takes a long time to change the economy. We would have to create hundreds of thousands of jobs making really high wages before you even see that show up in the economic data. And the reason being, you create that job at Intel, you also create a job at Walmart and McDonald's. So it brings the average down. That's just how you do that. That's how economics works. You have base industries, and then that results in more growth in local market industries, which tend to be the lower paying ones. So we have to keep up with this for a long time. But it makes sense. Think about how we go through the school system. You have to pass third grade before you go to fourth, then you go to fifth and sixth. But if you don't do that, you don't make it to high school graduation and college graduation. So we have to take these baby steps, but we have to be consistent with it. You can't do it 1 year and then skip it a year, then do it another year.
Are there things that could speed up the recovery or speed up that long-term change in the process, and what would those be?
I think we're doing quality things in terms of improving our economy locally. In Washington, there's just too much messed up. I think what Washington has to do first is they have to put a plan into place, but they might have to backload some of the really painful items until we have a little bit more solid footing in the economy. You can't raise taxes and make the draconian cuts that they're talking about all at the same time. And I'm pretty confident they're not going to do that. They're going to say they fixed the problem, but the real fix isn't going to come for 7 or 8 years, but that'll be enough to satisfy the consumer and the investor that something happened. In Arizona, what I'm concerned about now is that we've improved our tax structure, we have economic incentives, we still have some political issues related to immigration and others, but I'll leave that aside. I'm concerned that we might end up doing too much. I don't want to be the state that goes out there and just buys jobs. A lot of other states are doing that, and we feel like we have to compete with them. No. We don't have to spend $5 million of a deal closing fund to go out there and buy $20,000 a year jobs, and we're not doing that right now. So far we're doing the right thing. I would actually like to see us cut back a little bit on how aggressive we're implementing these tax credits, because I think we got to focus on the fundamentals more than just the purchase of jobs.
What would you say, just in very short terms, is the outlook both in the next 2 or 3 years, back to normalcy, as you're suggesting, and long-term for Arizona's economy? Is it good?
It's good. In fact, I'd break it down into 3 components. The stuff going on in Washington, I think, is going to dampen growth just a little bit this fiscal year. I think over the next 2 or 3 years, we're going to see some strong rates of growth until we get back to normal mid-decade. And if we continue the policies that we're doing now and we start having these discussions about long-term investments, I think the outlook is great. About a year ago, I wasn't thinking that. I was starting to look at New Mexico and some of the things Nevada was doing on how it's investing in economic development as those being some significant competitors. I think we've moved past those. But can we still maintain that and be smart in terms of how we invest?
Some of those fundamentals are working, with state employment growth showing some strength. To get a sense of it, I spoke with economist Aruna Murthy, the state's economic analyst for employment statistics. How is Arizona's job growth doing right now?
Arizona's job growth has picked up its pace. In terms of the private sector, this was the 6th consecutive month of over-the-year job gains in the private sector. It was about 2.7% in August. And over the month gains, this was the 3rd consecutive month of over-the-year gains above 2%. 98% of the gains came from the private sector. About 2% of the gains came from the public sector. In terms of its momentum, it is still gradual, but it's doing better than the nation overall. Across various sectors that Arizona has been known for, like retail, construction, trade, transportation, and utilities. So there are a few sectors, leisure and hospitality. There are quite a few sectors overall. Arizona is doing way better than the nation. But obviously all of us want more jobs, and I think we could have more jobs, but it's in the positive trajectory, and I think it's moving in the right direction.
Now, I'd like to return to a couple of those sectors in a minute, but let me ask you first, You said 98% of the growth is occurring in the private sector, 2% in the public sector. Is that good balance, or are there any concerns about that?
No, that's how the sectors are distributed as well. Majority of the jobs do occur in the private sector. And in the government sector, it's not shrinking, except that the rate of growth is not as high in the government sector as we would see in the private sector.
Now, one of the sectors that's really important to Arizona is construction, and you're talking about 7% growth in that sector at this point in the year. That's good growth, but it comes from a very small base. Is that not correct?
That's right. I mean, in terms of construction sector, we lost half the base of construction jobs for Arizona during the recession. So 7%, although the number looks big, in terms of number of jobs, there aren't a whole lot.
And what about in retail? That tends to be a reflection of consumer ability to purchase things and consumer confidence. And we're seeing some growth in that area in employment, correct?
Yes, over the year growth in the retail sector is about 3.2% compared to about 0.6% for the U.S. So we are doing way better than the U.S. in terms of the retail sector, and certainly that reflects consumer confidence and people spending in that particular sector. You know, during the recession, people held back spending for so long that now in a lot of the areas they do have to spend. And I think with the job growth improving slowly, people have the disposable income to make that spending.
Now, one of the things that you've done is you've kind of forecast job growth over the rest of the decade and categorized that. And a lot of the categories that the job growth is coming in are low-wage categories. Is that of concern for Arizona?
Well, I wouldn't think it's a concern for Arizona. What I would think is it's how Arizona has been historically been in terms of the share of the total non-farm jobs. Sectors like retail have had a higher share of total non-farm jobs. Leisure and hospitality sector has had a higher share of non-farm jobs. So when we forecast future occupations or jobs, they are going to be in sectors generally which have a higher share, especially when it comes to ranking those sectors. So you might have other new sectors or nascent sectors grow, but unless those sectors show significant volume of growth, you know, when you rank them by highest growth areas, they will continue to be the sectors where you see Arizona, which has traditionally, and Arizona historically has had more of the low-paying jobs, and about this time around we are predicting the same thing. 73% of the jobs are going to be in the type of jobs with less than a high school degree.
You presented this morning as part of the discussion at the Finance Advisory Committee for the Joint Legislative Budget Committee, and you talked a little bit about one of the positive signs in the economy as far as job growth goes, and that is in the employment services area. Would you talk about that a little bit for us?
Employment services as a sector is a sector where post-recession, if the numbers start gaining, we construe that things are getting better. This is a sector where we hire temporary employment, you know, where essentially later on down the road they become permanent employees, but that's a sector where we see temporary employees. So initially after the recession, we started seeing growth in that particular sector, and we started assuming things are getting better. After about a year, things started flattening out, and we were not sure what exactly is happening, even though for U.S. it continued to grow. And now things are getting back, we are seeing increases in that sector again, which we presume is because of increase in temporary employment, and hopefully that will turn to permanent employment down the road.
In the spring, your forecast was for 2% growth in jobs in Arizona. Are you still looking at 2%? Do you have that optimism?
As of August, we are at 2%. So we still have 4 more months to go. And generally, the last 4 months are good months for Arizona, where we see over-the-year gain, and we don't see over-the-year losses. And if the trends continue, and even over-the-month gains continue for the remaining 4 months, we expect to beat the forecast. All else, remaining good. So this is, again, unless Bureau of Labor Statistics benchmarks or revises our numbers end of the year. As of August, we are already at the forecast.
Economic activity, including workforce growth, are key drivers of the state's spending and budgeting. To find out where that is and what may transpire in the next several months, I spoke with State Senate Majority Leader Andy Biggs. Projections from economists show that Arizona won't be in full economic recovery for about another 3 years. What's the impact of that on state finances and state spending?
Well, Michael, I'm glad you asked that question, because when we prepared last year's state budget, we anticipated that we were still several years out. And so we looked at the fiscal years 14 and 15, trying to get a revenue projection, as well as what we would need to go forward with our spending projections, especially in the light of the sales tax going away in 13, as well as the implications of Obamacare, whether it be a full rollout, some kind of partial rollout. So right now, we believe that we are set to go forward, but I'm going to just tell you in anticipation of what I believe, in conjunction with what other economists are saying, I believe that we are looking at, if we do a full implementation and do a Medicaid add back, we'll be back in the hole in 2015.
So what does it look like for this fiscal year's remainder, another 9 months or so, and then projecting into the next fiscal year? We're seeing surpluses, and we came out of the last fiscal year with a pretty good surplus. Is that a part of the plan, or is that something unanticipated?
No, Michael, we anticipated we'd have some surplus. But what I think you're going to find out is, what you're going to see is that our revenue has slowed down. We are actually going to be, today, I would anticipate that we'll find out that we are below our revenue projections so far for 2013. So we anticipated some balance carry forwards at the end of 12. We hope that we can sustain that through 13, which will allow us to deal with these other anticipated economic issues.
On that basis, are you implying that there won't be increases in state spending beyond things such as Medicaid and other unanticipated things that may come along?
Well, certainly we will have some things that we can't anticipate today. And we will have some Medicaid or Obamacare type of implications that we're going to have to deal with. We've anticipated some of those. I would expect that you're going to see some other various issues that we're going to want to deal with, maybe in education, maybe other areas. But we can't begin adding back, because we also know, for instance, as I mentioned, in 2013 we're actually below revenue projections so far this year. So we have to bear that in mind. We also, I don't know if you've read some of the other economists that are out there right now who anticipate greater federal fiscal stress post-election, that somehow they're keeping this together through the election, and then when it happens, we have some other degrees of stress coming. And if that happens, I think that Arizona right now is in pretty good shape. But that doesn't mean that we can go ahead and spend a bunch of money in the coming fiscal year that we'll need.
You mentioned the expiration of the 1-cent sales tax next year, and you mentioned education funding, and those things go hand in hand. Now, voters have the opportunity to decide one way or another on making that 1-cent sales tax permanent, starting when the temporary one would expire. What will that do to projections if that should pass?
Well, part of the problem, Michael, with Prop 204, is that it divvies the money up into so many different pots, and it won't have any effect on our budget revenue projections necessarily, because that money is ostensibly allocated. So it won't have any effect really on revenue projections. But I think that it's because it is tied up in so many different areas, people will probably end up being, frankly, disappointed, expecting it to do more than it can possibly deliver under the current scheme as Prop 204 is.
I know it's way ahead of time, but if you had to vote on a state budget for the next fiscal year right now, what would it look like in relation to the current budget?
Well, yeah, we're way ahead of time, but I think I would be looking for something similar to what we're doing now. That is, we would want to make sure that we're in a position to cover all of our expenses. I anticipate, for instance, that we've probably seen some growth in K-12 population, so we'd have to be prepared to increase some K-12 expenditures. I think that you're going to also need to be certain that you still have a pot of money left at the end, because I think the real ramifications of the implementation of the healthcare, the federal healthcare issue, is not going to really fully hit us till next year. And so you want to have the money necessary. And I've seen different projections. They've ranged anywhere from an immediate 2014 half-a-year implication of $280 million to a full rollout 18 months later of over $1 billion. And if those are accurate in any ways, those range, we have got to be ready to handle those expenses.
Do you anticipate in the 2013-2014 budget, the one that the legislature will work on starting in January, that there will be a Medicaid component that comes out of the Affordable Care Act? In other words, an expansion of Medicaid in some form?
Michael, that's really hard to say, simply because we're dealing with a caucus that, in the Senate anyway, that is shifting dramatically. We're seeing some shift in the House caucus and in the bodies themselves. I think that for me it would be actually unwise for me to say that we'll see this or we won't, because I can't really say, because I need to find out who's here first. And once I know who's here, I can probably give you a more accurate prediction.
Longer versions of those interviews are on our website, azweek.com. There you'll also find more information on the state's economy and state government finance. A correction from last week's program. In my interview with a Tucson hospital official about its spending for uncovered care, I made reference to Medicare. The program we were discussing was Medicaid. That's our program for Friday, October 5th, 2012. Next week, a forum on Proposition 204, the Education Sales Tax Initiative. For Arizona Week, I'm Michael Chihai.
Production of Arizona Week is made possible in parts by a grant from the Stonewall Foundation and by the members of Arizona Public Media. Thank you for your continued support.